Good morning, everyone. Hey, Joe. JB. What's up, Tibby? How you guys doing? Hey, Moran. Jiraj. Good to see you. Donnie. How's Florida? Hey, Lonigan. How you doing? Well, we've gone through the heart of rollover now, and we are just 22,000 contracts left in the old one so far this morning. So it's almost over. Ah, Connecticut. Sorry, I keep thinking 305 is a Miami area code. It's been a while since I've been in the States. Uh, well, this is a little puzzling. So anybody looking at this chart, hey Worm, what's up? Anybody looking at this chart kind of confused as to what's going on? I mean, short term is pretty much old hat, right? Liquidating inventory from yesterday being sold higher overnight. So, the night market, which is what this is where you sell the inventory that you couldn't get rid of the day before, right? Or you cover what you couldn't buy the day before, right? That's generally the purpose of it. But longer term, this is curious. As the private equity guys say, oh, how curious, right? They use words like curious, substantial. Uh, so it's curious because the 68.64 on the new contract, there's so much inventory above it. You can see all of the days of trading above it. Yet we seem to be finding a bid somewhere down here. I was looking at this going, you know what? Once we accept underneath here, there's no structure here. This is the support until we get down to 67.88. Let me just make this a little smaller. Zoom in. See, it was this position that was taken and sold up here. And so far, okay, we filled this gap. These profiles are big, huge, long profiles. There's no support here really until we get down to 67.35, right? But we seem to be finding a bid, right? There's many days of overhanging inventory, Lonigan, but it's not trading like a normal market would. Now, I attributed the bid support yesterday to the rollover, and the rollover is starting to get almost finished, right? So what's causing this support? Hmm, right? Of course, short-term shorts are short underneath 68.24, and so they're holding the bid up. It's going to be very interesting to see today if we can get above 64, or is this a big look above and fail of 64? I think it's a look above and fail of 64, right? If I'm just looking at what the chart's telling me, it's looked above 64 and fail. So if you were looking to short this, what you would do is if you were a large trader and you're building a short position, right? Large trader building short position, okay? So there's my disclaimer, okay? This is not for people with funded accounts. But if you're a large trader and you're building a position, you'd be shorting 62 right here. And welcome HFX and the people who are joining us on YouTube. You'd be short there, and you'd be putting your warning level would be 64 and a quarter, and you would be looking for 54 as your out. So 64 and a quarter would be your warning, and if you were really feeling like Daddy Warbucks, your stop would be the overnight high, right? Because overnight inventory also is long. So you've got that going for you, right? Anybody here see Caddyshack? When Bill Murray meets the Dalai Lama? Anyway, sorry, I'm in a weird mood. It's a strange market. Look above and fail of 64. We're targeting 54. So if you're short in these 60s, right, your warning level is 64 and a quarter. Now let's see how this puppy plays out over the day. Sorry, I'm a little behind with marking my charts. Ugh. Overnight inventory is long. This is a bit of a correction down. Now, J period opened, went up. Let's see if London opens, right? If London can take out this low here at 58. That's my sort of larger time frame low. And these are my balance levels. I realize they're a little big. Ranges are a little big. You know, when we had smaller ranges, we had sometimes 4-point balance zones, but now they're a little bit bigger, right? So if we're shorting this area here, we really need it to stay under 61 on a shorter time frame. We're still in distribution. So, folks, I'm full disclosure here. I haven't done any work at all since last night. So I woke up and I actually went to the gym. And so I'm doing this on the fly here. No problem, Howard. And Howard, to answer your question from yesterday, yes, you can. I just need to work out how. Okay? Sorry. I'm a little behind because I was running around on Monday and it got me behind all week. No problem. Okay, we have a seller, right? So people who are joining us, how this works is why do I have these funny colors on my chart and what's this guy talking about? Well, this blue area here, the dark blue area here is the cost basis of our inventory. Market profile people call that the value area. So what I do is I find a place where the market goes back and forth, I mark it, I use that as a cost basis. Sometimes I confirm it with volume profile. But if you look at, there's a cost basis there and you double it, that's the profit zone. That's 2 times profit. And then if the market were to keep going, you would be into 4 times profit. And this is how I trade because I'm a trader. I need to know where this crap is priced at so I know if I'm paying too much or getting a good deal. Does that make sense? If I put it to you that way, when you're trading, you want to know whether you're paying too much or you're getting a good deal, right? Does that make sense? Because you want to be do trades where you're getting a good deal, right? I mean, that's why people go to Costco, all right? That's why people go to Costco and buy a jar of peanut butter that's bigger than their head, right? Because they're getting a good deal, right? Same thing applies, right? You're right, Moran. The same thing applies, right, to markets, right? This is the wholesale price. This is the retail price, right? I'm always trying to find ways to explain this so people get it. Dave, it's always a good deal, Dave. Remember, that is our motto from now on, right? Remember, we are sellers in our new venture. We are sellers, right? So every deal is a good deal, my friend. You should definitely buy it. It's going higher, right? Or as one of the guys who trained me, Uncle Harry, would say, "Get on the bid, kid. It's a career builder." He was trying to get you to buy his crappy stock. You'd always say, "Get on the bid, kid. It's a career builder. Buy my stock. You'll never have any trouble again." So, cost basis, and then you retail it out. Now, what happens when you run out of people to buy it? What do you do then? Right? So your cost basis is here, you're selling it here, you're having a great old time, right? And then all of a sudden, Moran and Howard show up and start selling at 61. I'm like, damn. So I'll sell at 60. And then Raj comes in and sells at 59. And then Dave comes in and sells at 58. So we all start moving our price down, and that's when you short. Okay? So you want to short a market where the sellers are putting price on sale. And how do you figure that out? By looking at a chart. Well, you draw levels like this. Do you see this is a balance zone in itself, right? So if I was redoing a balance zone right now, this would be my zone. It'd be right here. You see? Exactly now, Jiraj. I don't know. I think you took the limitless pill. Nailed it. Now you're cooking with gas, my friend. Now you're cooking with gas, right? Exactly. Knowing the difference between types of buying is really important. Now, why is that? Because if you're a short seller, you want to wait until that temporary buying, temporary short covering runs out. When those shorts finally get covered, the thing's going to drop, right? Real buying, there's different types of real buying. There's buying from people who are swing trading, scalping, right? So scalpers are what we call flippers. They flip in and out. We are scalpers, right? We don't marry this thing. We're just speed dating this thing, right? In and out, get paid, buy, right? Swing traders are holding it for a little bit longer, right? Right? They're dating this thing for maybe 8 hours to like 2 weeks, 3 weeks, right? Then there's investment money. Now, investors, those are long-term commitment people, right? This market is full of everything but investors. No one's investing in the ES, right? This is a speculative market. So this market is like that disco in Saturday Night Fever. Everyone's dancing around, right? It's all temporary, right? So that's why we get huge ranges. because no large investment company would put a position together in a range that's 100 points, right? You want to buy your inventory in a tight range, right? You like say Jiraj, so if you were buying inventory for your business with your pops, you wouldn't be buying one item at $1,000 and then one at 50 and then one at 100. Like you get most of your inventory at the same price, right? That's how proper business is done. So yeah, good questions, man. I could see you stepped up your game. Good to see. So this is a distribution cost basis, right? This is an accumulation cost basis. This is distribution. This is accumulation. This is the highway. So this is where you load up the trucks full of crap, you drive them to the store, and you sell. Now, if you achieve price stability, people will come in and they'll start buying. How do you know? It'll accept over 61, right? And that 64 quarter level will start to get acceptance over it. Hey, AZS, what's going on? So now, if people like this product, they will raise price because more people will come in. And that's when you don't want to be short. So if you were short and it's starting to tickle that 64, right, you would have a lookout offer at 64, right? So if you're short, say 60, if you get taken at 64, you're like, ooh, there's some buying in this thing. You want to watch that 64 area. Now that's your warning level. If you're a short seller on a larger scale, right, you're seeing bids, you might want to start cutting your position a little bit, right? Right? If you're short 10, 20 contracts in the 60s, you might want to start paring down your position and re-short it if it stays under 64, right? Now that is expensive, and there is a cost of doing business. Thank you, Moran. There is a single here, isn't there? You're right. So there is a short position at 58, something I missed when I was doing my initial look at this. So that tells you that there's a short position underneath 68.58. They're going to use that short position and they're going to milk it for as much as they can to sell as much as they can above 58. Because if you know someone's trapped short under 58, what does that mean? It means that they are sitting there trying to buy it back. So what you do is if I know that, like, let's say AZS, if I know that AZS, Raj, and Moran are short under 58, I will bid 60. Okay? I will bid 60, and now they're trapped underneath me. And I can sell all my product between 61, 62, and 63. I might have to buy some at 60, but it'll pop back up. Are you guys getting this? Just checking. So if I know that people are short here, I'll put in a buy order here. And I'll be selling up here. This is how you make a market. This is how you make $50 million a month, okay? And I'm selling up here, and every time it gets down there, I'll have to buy a little bit, but I'll flip it out because these guys are in trouble and they're going to keep coming in and moving higher. The only time that plan goes to crap is if a whole bunch of sellers decide to pop out. Then I'm going to have to. Then the short trap fails. Does that make sense? Do you guys understand the mechanics of it? I know it's a bit complicated to go into that in the first, but that's what's going on, and that's why price moves. Okay? So if I know that you are short under 58, I'll bid 60 and I'll support that bid knowing that there's buyers underneath me. That's called leverage. Then I will sell my position between 60 and 62. I might have to buy 60, 61 to hold the market up here, but I'm going to sell two for every one I buy. And that, my friends, is why they call it making a market. Okay? And you're not going to learn that in any other trading room. So I strongly suggest if you want to learn how to trade this thing, people on YouTube, right? Join us at the tradingsyndicate.org. Little, got to do a little advertising for the room, okay? And make use of our AI trading coach. Okay, so do you see how that's working now? Do you understand the mechanics of distribution? So a lot of people ask me, are they building a long cost basis up here? No, they're not. Their job is to sell as much as they can here while the shorts are still trapped under 58. How do I know the shorts are trapped under 58? You ready? Dun, dun, dun. Right there. Right? The bottom of the candle is where the sellers stop selling. Why would the sellers stop selling? Because they see buyers lining up and they can raise price. It's that simple. The bid is getting higher. Yeah. Because the buyers are chasing price higher. Hey, Blues Queen. How you doing? Thank you. Good having you with us. Yeah, they don't have to sell under 61. I mean, sorry, they don't have to sell under 58, so they raise prices, right? So this process will happen as long as these people that you've conned into buying between 64, 61 and 64, if they still believe in the dream is this, right? That's why they're buying it here. But if they start getting nervous and they take out that 58, then we'll get an inventory correction down and they'll have to put it on sale. Because as soon as they start to sell, the people who are long here will knock the price down, buy it all back, and then do this again. Right? It's that back and forth motion. That's what causes markets to move. Right? So wholesalers have an inventory of goods. Order flow is a really fancy way of saying customer traffic coming into the store, right? So if you got a lot of customers coming in, you get some nice big candles, or you get one big customer, a couple of big orders, you'll get some nice candles that way. But when it's tiny and choppy like this, it just means business is slow. So getting up to that 64 again, let's see what happens. I'm trying to find, I have to clean up my 4-hour chart. That is, that needs to be done. We'll just be patient and see what happens when London opens. So now we're creeping above that 64 quarter. London's going to open in 3 minutes. We know there's a short position under 58. Exactly, Raj. How you doing? It's exactly like that. It's like when a new movie comes out and they show you the trailers to build the drama. It's exactly what's going on. Now, I'm expecting to be selling at 64. And now why am I expecting selling at 64? Because these last 2 days of inventory, I find it weird that they could all be flushed out yesterday and then we have it and we're going to do this. I don't know. I don't know. For some reason, I'm so short biased, right? And when I'm short biased like I am, and I can kind of explain it, but my thesis might be shaky. So when I'm like that, I'll do some test trades to see whether I'm right. The test trades of being short 60, 62, that's not really working out right now, right? See? Every candle is telling me that my short bias might not be right at this time. Now, especially if we take that overnight high, I'm definitely wrong. The buying retention is surprisingly better than I thought, Josh. You're right. See, because of this contract rollover, my my perception is a little skewed. Yeah, it's a bit tricky to trade on the short side. And let's face it, this market is usually tricky to trade on the short side. It has been since COVID. Ever since they locked up the supply, right? This market's been tricky. Now, when London opens, um, I want to see whether or not we can get down to that K low. So London's going to open in a couple of seconds here. And if you're short, I'd have some bids in, just in case, right? Short 63, covered 61. Covered 61 and, sorry, 61 and 3/4, I'm sorry. Yeah, that might be it. Looking for a seller. Where's my seller? See if I can grab another one at 61. No, had to pay 62. There we go. I'm just trading the micro, trying to get a sense of what's going on. And yeah, it's fairly well bid. Now I'm watching 61. If it can't break 61 and you're short, London loves to push it down. Let's see how hard the bid. Let's see how well it's bid down here when we get to the 60s. There we go. There we go. There we go. So if I was still short a couple of contracts, that would have been a nice cover here at 60, 60 and a half. I covered too soon, right? Exactly. Exactly, Moran. Exactly. But our guy seems to miraculously make it to the top of the ladder. He kind of stumbles every once in a while, but he's not doing too bad over the last 5 years. This market has been a short seller's nightmare. Literally, it's been a short selling nightmare. You know, it's just like hit and run shorts. If you stick around in a short too long, oh my God, you're like the guy who's not invited to the party. Ugh, it's bad, right? It's okay to short the backfill like I just did. I was short 63 and I covered, for a point here, a point and a half there. Not the greatest. I could have held a little longer, but I was nervous, right? Yeah, look below and fail of 61 for a moment. Let's see. We're still in distribution. Yeah, today is slow for now. Yesterday it went a little buck wild at the open, so that might happen again. Be prepared for that. Those of you who are learning how to trade, Use the slow time to learn, take your trades, right? That volatility when you have 10.1 minute candles, that is harder to trade. It's definitely harder to trade. Ah, there we go. This is what I want. I want to see if that 58 bid is still there. It's a pain to short. I had to take that short though. I had to see for myself because I did see a seller here at 64. Now I'm seeing if that bid at 58 is still there. See, you could see the position is underneath us, right? There's the position. That's where it's being sold. If it gets really bad, we come back to where we bought it, right? We mark it down, right? That bid's still there at 58. I don't know if I'd buy that, but if you are buying the 58s, where's your stop going to be? It's just right underneath the bottom of that candle, right? If you're like one of those traders who has to jump in, right, your stop should be at the bottom of that candle. You really shouldn't be. There's really no structural place, and you want to, unless you want to put it down here at 53, right? And you know that there's going to be a sell order right here, that gap, right? So make sure that you sell into strength if you were long 59, right? Don't don't dilly dally. Excuse me. And 62 is going to be your next level if we break the 61s, right? Now, do you folks see how you take trades when you find the bid? Right? We were stalking that 58 level. The bid was there. You buy 59, you put your stop underneath the candle, and then you sell into the strength here, right? If you are a scalper, right, that's your trade. You buy 59, sell 61. 2 points. And you're like, JJ, that's not a lot of money. Well, 2 points on an E-mini is $100, and on 4 E-minis, that's $400. Are you guys really making $500 a day? I'll take $500 a day. I don't know about you. I'm not too proud, right? I'll take it. I'll take an extra $400 a day. It adds up. Hell, I'll take 300. Right? But do you guys understand the reason for these trades? Right? When you're short, you see a seller. When the sellers stop selling at a certain level, do you see how much more simple that is? Yeah, 61 to 58, 58 to 61. You know, whichever way you want to swing it, AZS, 2, 3 points. See, the trick to this business is to make some money and keep the money, right? Make some money and keep the money. So if you can make as a new trader, if you can make a couple of $100 a day, you're going to have an income. And then you can always size that up once you know what you're doing, once you get some skill, right? You're trying to build your skill as a trader. It's a skill business, right? So, you know, over time, that $300 a day is going to become 3 grand a day, right? And now you're cooking with gas. But you got to start somewhere. Start with $30 a day and see if you can actually keep it, right? Now, a lot of people laugh when I say that. Can you make $50 a day and actually hang on to it? Most people can't. They laugh and they're like, "Oh, it's not worth my time." I'm like, "Yeah, well, education's not worth your time." Okay, right? You're entitled and you think that you're it's your right to come into the market and make money, where the people in the market would like cut your head off and leave you dying in an alley without even thinking about it for your money, right? We're savages. You're coming into our domain. These are people. I have seen brothers screw each other for millions of dollars. I've seen fathers take their sons out and the other way around. And you think you're just going to waltz into here and just walk out with our money? Yeah, sure. Come on in. Right? This is why I want to teach you guys to be smart, to be quick, to be street smart. Right? Being book smart in a fight, it's not like Sherlock Holmes where he's calculating angles. That's all BS. Right? Nobody's going to just walk over. You think you're just going to pull your pickup truck up to the New York Stock Exchange and they're going to fill the bed with cash? It's not going to happen, right? Let's see if that 58 bid is still there. Find out where they stop selling. Hey, quick, how you doing? Find out where they initiate selling because your business is between those two spots. You know? Your business is where they initiate selling to where they end selling. How are you going to do business? It is. You're right, AZS. It's tricky, right? In the immortal words of Run DMC, it's tricky, right? Nice distribution here, right? Now, what am I looking for? Where's Howard? What am I looking for around 62? It's going to happen soon. We're coming up on it. Watch. A few more contracts. Come on, print those 62 3/4, 62 quarter, 62 half. It's going to happen. Come on now. What are we waiting for? Oh, come on. We need what? Another 20 contracts? 50 contracts? What is the POC? 1366. So I need another 20. There we go. 52. What am I looking for? Good distribution. I want the point of control to move up. Looking for good distribution. Come on. Give me 20 more contracts at 62 half. Oh, the drama. Right? So the distribution's pretty good tonight. Pretty good distribution. We've been up here for almost 3 hours. Come on, give me 6 more contracts there. So the point of control moving up means that we've sold a good amount of inventory and we're close, right? We're just a couple of contracts off moving the point of control up. After the point of control moves up, there we go. See? Boom. So we've taken this cheap crap and we've sold it up here. That's what the point of control moves up meaning. Now, do we short this thing? Yeah, I don't know, right? Usually after the point of control moves up, usually, with quotes, you know the air quotes, right? Usually after the point of control moves up, there'll be a little bit of a sale. Let's see. So if we short 62 and cover 60 and 3/4, see if I can get one at 60 and a half. That's not bad, right? I'm looking for that 58, 59. But do you see here? Look at this. Right there. See, the bid was here and then it moved up here. Let's see if it's still here. That's why I was covering as quick as I could, because I don't trust this structure right here. Will they sell underneath it? Come on. There we go. Offer 59. Come on, offer 59. Nope. Going begging. See how the buying's coming in? Now, if you get over 61, bastards. See how they pulled the offer, AZS? That bid, see, the bid was here, and then it moved up here. It partially filled here, but there were still buy orders here. So it hit those buy orders, and the bastards lifted the offer, right? Now, in the old days, there was a market maker that we worked with, affectionately known as the bitch. And so what we'd do is we'd sell a stock down, right? We'd sell our supply, right? And people would follow us down and they would short. And they'd short and short and short and short. And then all of a sudden the bitch would pop up and put a bid in here for 1 million shares, right? And then we'd hop them and we'd take all the money that we made selling it down and rip the stock back up, and we'd have a whole bunch of people trapped short, right? Good old days. And then we just yank all the offers, trap everybody short, and we bought all their short paper. Back to distribution again, right? So those bids are still there, right? Those 58, 59 bids are still there. Hit and run shorts only. For now. For now. Now let's see 64 1/4. So I've been scalping that 64 1/4 level short. If I was a larger trader, I would scalp that level first to put my fingers in the dirt of the order flow. Okay? So the larger traders, I know you guys aren't listening right now because you're probably asleep, but that's how I would trade a level to see to check out the order flow there. Because sometimes if you're going to get into a long-term trade, you don't want to be 20 points offside, 30 points offside, even if you have the capital. I just don't think that's an efficient use of capital, right? If it works, great, but what if it doesn't? How about scalp the level, stick your fingers in the dirt of the order flow at the level that you're looking to short, especially in a slower market, right? If the market is slower and you can like dig around and find out where the bids are, because you now know if you're shorting against 64 1/4 that there is a fairly solid bid at 58. Now that's market intelligence you can use. That's not some stupid indicator, right? You know that they're going to stop selling at 58, so why would you short 59? That would be stupid, right? If you know they stop selling at 58, why would you short 59? right? And you know they're selling at 64, why would you buy a breakout of 64, right? You want to buy 62 to 64. You want to buy 59 to 63. That's how you trade that intelligently. You're not looking for a breakout because you know they're in distribution, right? Cost basis is between 43 and 49. You want to buy a breakout so this thing goes higher. And indeed it might, but that is not an intelligent trade, right? If you were long position between 62 and 63, you can put some sell orders at 65, 66, 67, right? Think about your trades. Do they make business sense? If your trades do not make business sense, you're just hoping and wishing and praying, and that never works and translates into money. You have to be tactical and you have to be intelligent about this. Otherwise, it's a waste of time, right? Exactly. You might as well go into a casino and bet it all on red or black. Right. So now is if I was thinking look above and fail of 64, I'm not convinced, right? I will only short this thing once it breaks 58, 59. It gets under 61. There's no reason to hit it here, right? Maybe it does a look above and fail of 66 back to 62, 61, right, for a scalp. But longer term, and if it accepts over 64, see, it's rejecting 64 again, right? So that's why you were right 20 minutes ago when you messaged me, AZS. You said it's tricky. Indeed, it is tricky. So if you understand when a market is tricky, you're going to be less likely to just take stabs at it, right? So if you take less stabs at trading, if you take less trades, and you intelligently look at the trades that you're going to take, you are going to lose less money. Because if it goes wrong, you're immediately going to get out, right? You're not going to be delusional, right? And that's the problem with retail traders. They're completely delusional. They have no clue how this works. So they buy something or they short something and they say, oh, this should happen. Why? Because some idiot on Twitter said it should, right? So learn the business. We are in distribution. We have shorts trapped under 58, and they are selling the inventory from yesterday at the close, and today's early Globex session is being distributed above 58, using the trap shorts to hold the market up to distribute. So every time we get down here under 61, look for those bids at 58 and 59. If they disappear, the market will drop back down to 54. Why? Because that is the last little cost basis here. And it's also front-running VWAP. The less you get stopped out, hey Dan, how you doing? The less you get stopped out, the better. Because when you get stopped out, that is a business expense. You, my friend, as a trader, you want to keep your business expenses as low as possible, right? Those are operating expenses, right? Keep your operating expenses lower. Your profits will thank you, right? The other thing that you're going to do is if you keep your um, expenses lower, if you don't get stopped out as much, it's going to build your confidence, right? You're going to feel better. And when you feel better, generally you trade better, okay? And when you don't get stopped out as much, you don't get into those spirals, right? Where you start getting angry and upset and everything. So it's better for your mental health not to get stopped out as much. How do you not get stopped out as much? Take more intelligent trades. Think about your trade before you take it. Assess the business environment that you're trading in. Before you get into a trade, know where your out is, right? If you don't know where the exit is, you shouldn't be in the trade, right? And if you don't know where your profit target is and whether that's achievable, you shouldn't be in the trade, right? If you don't know the business reason for your trade, you shouldn't be in the trade, right? If the market is unclear, you shouldn't be in the trade, right? You have a limited amount of capital, and you also, unfortunately, because you're starting out trading, you have a limited amount of emotional capital, which means you don't have the wherewithal yet to be able to say take a stop and look at the stop and analyze it and understand what happened, right? That takes time. So while you are learning, try and preserve your capital and your sanity. I hope that makes sense, right? Respect the money that you have. If you don't respect the money you're trading with, we'll take it. We'll take it before you can even say howdy doody, right? Learn from your bad trades, learn from your good trades, right? Good stuff, Badir. Yeah, and I wouldn't worry about win rates so much. Um, you know, I would focus on, are you making money, right? I'm short 62 and a half, and I've got some bids down here at 60 and a quarter. Bought one back at 69, 59. I got two left. I'm 59 3/4 bid, 60 bid. I got a stop at 60 and a half. See how I'm trading this? I look for a seller. I hit it where that seller is, and I'm flat, right? I know there's going to be bids at 59, 58, right? Exactly, AZS. Exactly, right? You're going to be wrong. I'm wrong all the time, right? You just have to admit that you're wrong and get out without making a big hairy deal out of it. Eventually, you will be comfortable with being wrong, right? There you go, 450 trades. See, he's put in the work. He puts in the work every day, and you have to. And he documents how he's doing in his trading. You have to, right? Retail trading is very persnickety, unfortunately, and it takes discipline, which, you know, I was never disciplined. I was horrible at discipline, right? Because, institutional trading, you don't journal, you don't do anything. You trade the order flow, you work the orders for your clients, and then you go to the bar. Retail trading, after the market closes, that's when the work begins. You replay charts, you journal, you do all of that stuff, right? What's up, Mikey? How you doing? How's life in Oregon? Hey, you're in Oregon, right? There is I'm gonna call you later. I might have a job for you, unmarket related. There's a brand new Mustang sitting in Oregon that one of my buddy's kids abandoned. Might have you go pick that thing up. Ugh. Actually, it's AZS. I'm gonna correct you about that. I don't like the word game. It's a business, right? So don't. But you were right about everything else, right? Just replace game with business. It's a probability business, right? And you're good to go. Canopy growth? Wasn't that one of those pot deals? Tilray, Canopy growth. That one I don't know about. I know the Tilray boys. That deal bought some nice boats. Oh, sorry. Yeah, is the volume getting up? What is the symbol on that thing? Canopy growth. Um, so why do stocks run at the end of the year? All this volume because the insiders are getting out to pay for Christmas. CGC. Yeah, Smith Falls. It's Canadian, right? Well, the Tilray boys got some really. The Tilray guys, I'll give those guys credit because they sold a lot of paper, right? They sold a lot of stock, right? You have to respect the hustle, right? They bought some really nice bayliners and yachts and things like that from selling stock in that deal. Oh yeah, Canopy growth. Yeah, that is a Christmas bump. Yeah, but you don't know where the offshore paper is, Iffy. Right? Somebody probably wrote a convertible on it. That's Christmas money, man. I know. If I had a nickel for every stock I pumped at Christmas time, they're gonna pump it this week. They'll get their wires next week. It's a beautiful thing. You guys will buy it. It'll go to shit. We sell, you buy, right? We go buy a boat. Everybody else goes to the poorhouse. It's penny stocks, right? That's why I tell people don't ever invest in penny stocks unless why would you buy penny stock? They give you the shit for free. Excuse my language. Why would you buy something that you can get for free, right? If you're up 30K, good for you. Just don't get married to it, my friend. In the pre-Christmas pump, right? I'm sending positive vibes. May the goddess of order flow, may the goddess of order flow be kind to you. And I hope you make serious bank on it because every time a retail investor makes money, a market maker gets his wings. This 64 area is still kind of, as one of my old bosses would say, nebulous. Having said that, I'm going to hop. I will see you guys later. Have a great morning. Come see us at thetradingsyndicate.org if you want to learn how to make money in this business without any double talk. Okay? We will teach you. And If you're looking for the perfect Christmas gift, buy your loved one some one-on-one mentoring with me. The gift that will pay for itself. Thanks, everyone. Have a wonderful, wonderful day. Don't take candy from strange market makers. Make intelligent, sound business decisions. If you have questions, reach out and ask me. I'm around. And we'll see you at 9 o'clock. And folks in our trading room, remember, 11 o'clock this morning, Eastern Time, we will have our execution lab. All right? Thanks, everyone. Bye for now.